And the U.S. have a trade deal, and up go stocks. 1,000 points higher for the Dow, nearly 800 points up for the Nasdaq. That's close to a 4% gain. Keith Fitz joining me now. I guess we're off to the races, right, Keith?
Yes, we are. We are just going to fly out of this. And the big danger for everybody now, Stuart, is anybody who went to the sidelines thinking they were going to be smart risks missing a huge amount of wealth that could have otherwise been in their pockets.
Does it have momentum? I mean, does it have legs?
Well, we'll find out. Our first look at that today as day traders get into it. I think it's going to hold. I think as additional headlines break and more countries come to the table, this could look like child's play.
Whoa. But tax cuts, are they now the focus of attention?
You know, dare say it, they're going to be the focus of attention, Stuart. But in terms of the markets, I think they're going to be almost an afterthought after this one.
Really? I thought
Yes.
the market was really, and the economy, really heavily dependent on getting those tax cuts moving forward. But you think the China trade deal's bigger?
I do, and respectfully, I would push back on that because, you know, tax cuts are going to be what about you keep in your pocket. They're sort of a political discussion. This is about raw growth. This is about reigniting the global economy. Traders and investors are going to move forward on that because they know that is the better path to profits.
You like Walmart, I take it. They will be beneficiaries of lower tariffs on Chinese stuff coming in.
They will, and also they're moving online at a speed that I think has caught Amazon by surprise. They are going to challenge a lot of people. They now have an intensely loyal customer base, and the high margin activities that they're engaged in, I think, are going to be great for the stock. I think another 25% within the next 12 months, conservatively.
I'm doing the math in my head. That means you're looking at about 120-ish.
121. Yeah, 121, 122.
Okay. I noticed that the price of gold is down about $100 an ounce today, $101, back to $32.42. Why is that?
Well, I think that pales in comparison to what's going to happen next. I think it drops by as much as 50% within the next 24 months because the risk is going to come away. We were looking at a Fed rate cut potentially. We're looking at a Chinese deal. We're looking at peace potentially in Russia, Ukraine. We've got China at the table. I think all of the reasons that led millions of people to go to it are suddenly going to vanish, just like they did in the European currency crisis.
You missed one out, the India-Pakistan fighting.
There we go.
Ceasefire, and it's holding. I thought that was a big driver of the price of gold because that part of the world invests heavily on gold for individuals. They're big gold buyers. So
I agree.
You take that war out and the ceasefire is holding. That's terrible news for gold and the gold miners all the way down. But you've been saying this for some time, Keith.
Well, you know, I like to think that I'm reasonably good at my job, having done this for so long, but you know, I could have easily been wrong, Stuart. I mean, this is a very tough business. So what you've got to do is think in terms of probabilities, not necessarily possibilities. So if you're going to go out and you're going to invest, you want to find the stuff that's going to succeed despite it all, because the markets have a remarkable propensity, backed by brilliant people, to run sharply higher when things are good. Uncertainty, fear, and doubt.
In 10 seconds, give me one stock that Stuart Varney should buy today.
Bar none, Apple.
Apple. Ooh, wasn't expecting that, but that's what came down the pipe. Keith, you're all right. We'll see you again soon. The market is